Today we're talking about Realty, as was just pointed out a couple of moments back, and why yesterday's crack, or what yesterday's crack might indicate, if anything. That's one of the topics. And the other topic, of course, is ITC, where Hersh is going to talk about several aspects about this whole stake sale, which has dragged on for quite a while, and that seemingly is finally getting done. But what does that mean for existing shareholders? What does that mean for prospective retail shareholders? Should you buy if you miss the rally? Is something that we will attempt to cover. But shall we start with real estate?
Your call.
Okay, so let's start with real estate, because what a crack yesterday and a few of the stocks. But having said that, DLF still up 19% despite the crack yesterday. What are we looking at? Is this a flash in the pan?
Maybe start with that. And I'm going to time myself to 4 minutes because otherwise anchors are notorious for loving their voice. Yes. Okay, so here's what the stocks have done. YTD, DLF still up 19%, but Prestige, flattish, Sobhat up 37%, but more important statistic is the one-year return, right? The one-year return for some of these stocks has been exceptional. Yeah. I mean, look at DLF, 152%, Prestige, 190%, 153, 156, 107% for Godrej Properties. So the one-year return for some of these stocks has been exceptional. Now, and therefore, you argue that maybe real estate is behaving like real estate, which is that it is very excited on the upside, and on the downside also, when there is a first sign of caution, you would see some bit of profit booking in these stocks. You could also argue, as Samina was saying, that is delayed rate cut also coming into play here, but real estate stocks more linked to the economy fundamentally, maybe sentimentally more linked to
and a large part of the rally took place at high interest rates.
Exactly. So which is why economy linked factors out here, right? Is the economy, is real estate being a lead indicator of what the economy will do? Who knows? Let's see. But here are some stats, guys. So you know, we're talking about whether fundamentally things are in place for real estate or no. One, home sales of India's residential property market saw a 48% increase YOY in FY23. And I have some data for recency as well, but just laying out the broad picture. Top 10 listed developers have expanded 2x the sector growth since 2017. You look at the 7 consecutive years, the top 10 listed players' growth in market share has been 2x the growth of the market at large. So clearly the listed players are benefiting, we know about it. Historically, real estate as a sector back in 2000, up till 2008, was about 7-8% of the index weightage. It's just a measly less than 2% currently. Can that weightage go up? Very likely. So, and just the last piece on the overall macro about what could India do, right? People love these data. Look at India versus China, that's the closest comparable. Hopefully we don't end up like the Chinese property market.
Yes.
But here's some data. The GDP in USD trillion, India 2022.6, China was 2.3 in 2005, expanded to 11.8, etc. Home ownership expanded in China from 65% to 85%. In India, it was at 69%. If we go to 81%, which is expected by most people, then the cycle, as Tamanna was saying, is still
ongoing
and not ended. Now, why the fall? Clearly, I would attribute it to the fact that, one, its volatility and drawdowns are more large than the broader markets, and two, the valuations for some of the stocks have certainly inched up. So, you know, the broad macro on your screen, GDP, urbanization, home ownership, market size, clearly in favor of this index doing well. The inherent demand, guys, is very strong. So now we bring to the recency bias, right? And just trying to figure out if there are some chinks in the armor. Look at the comparison of units launched versus units absorbed for January for the top 7 regions. I've taken 4. MMR, units launched 9522. Units absorbed 18,000.
Twice that, yeah.
NCR 1556, units absorbed 2637. Bangalore 3685 units launched, absorbed 5,700. Pune 3,800 launched, 8,700 units absorbed. Hyderabad was the only chink in the armor. The recent commentary, REIT managers claim renewed interest in office leasing. Occupiers are looking to expand, and new GCC clients are entering the Indian market as well. And we spoke about the GCC data sometime in the month of January, wherein Chennai, Bangalore, Hyderabad are just seeing some tremendous global capability center demand. So that is on the REIT side. On the developer side, the MMR developers are very constructive because the Mumbai property registrations were up 24% in Feb.
Sure.
Same data for NCR, same data for Pune, same data for Bangalore. Tell me, where is the slowdown?
Okay, so no slowdown, seemingly based on the data that we're seeing.
As of now, nothing.
Seemingly, based on the data that we're seeing, the trend is intact. However, you pointed out yourself that despite the correction or despite the drop yesterday, where still some of these stocks are up significantly year to date, and the year-on-year, the one-year performance is phenomenal. So how much of that, at least in the near term, is in the price?
So that's the problem.
Is the question. So it's a valuation issue.
It's a valuation issue, maybe. At that term, using the term, maybe my last point here, because before we move on. But the fact that because the markets have run up and because there is some bit of stress at the SME end of the market or the small cap end of the market or the volatile end of the market, real estate would react this way. So there's no saying that the stocks will not go down. Possibly could. But would they see buying at lower levels because fundamentally things are still looking strong? Arguably, you can make that argument that that could well be the case.
And would that, sorry to interrupt, would that switch given that the rate cut cycle might start sometime this year?
Yeah, but as we said, Hersh, at some point of time, that's more sentimental maybe. Fundamentally, real estate growth has been linked to economic growth and not as much to interest rate cut. Because you don't buy a house because rates are up or down. You buy a house when your pocket is looking strong.
Allows it.
Or if the equity markets have been supportive and you book some profits, that's a possibility as well. But let's jump straight into ITC because it's not. It's dropped significantly from the 52-week high, which stood close to 500. It's standing close to 400 right now. And I think this cloud, some would say, of BAT selling has been going on since December last year. It's finally coming to pass. What do we know right now, and what are the implications for shareholders?
Well, first off, Alex, around 43.5 crore shares up for grabs. It's going to be largely bought up by institutions. That's what BAT has suggested in its announcement. So it's not exactly going to come straight on the market and pressure the typical retail shareholder. Institutions are likely going to pick a lot of this stake up. And therefore, ideally, the fall should be limited because there is buying support. At least this is purely from a perspective of demand supply that I'm talking about at the moment. So that definitely seems clear. So around 16.5 to 17.5 crore odd of shares which will be bought and sold. And BAT has not been generally a seller in ITC. They've consistently held above 25% since the last at least 7 to 8 years. So they've not been a seller at all. And the ITC key piece is obviously that the free float continues to be roughly 75%. So I don't think that it's really impacted the free float in a big way, and institutions are coming in any case. So from a demand supply perspective, don't see that as a major challenge, at least at the moment.
So, okay, so from the perspective of the stake sale itself, but then what do we look forward to? If we're talking about the price band, if I remember correctly, it's not too far away from the current market price, right? It goes up to what, 400 or thereabouts?
Yes.
So, right, 380 to 400 or thereabouts.
385 to 400.
So it's not that far away. What do investors, retail investors, look at from this point based on the fundamentals? They've been reasonably supported. I think EPS growth also is projected to be quite reasonably strong going forward as well, Hersh.
Well, yes, absolutely, Alex. So on the fundamental side, and that's how one ought to look at it at a time like this, whether one should invest or not. Well, I've just pulled out some data. One, the PE ratio at the Feb 22 possible bottom, because the stock has almost doubled from there, was roughly 18 times. Currently, the PE ratio stands at 22 times forward, which is FY26 forward, based on Bloomberg estimates. So we've taken all analyst estimates into account, broadly 22 times. And 32 times was the top recent peak, which is
a 52-week high.
Correct, which is in 2023 when the stock peaked. So well below the peak, but very close to the 52-week low. Not anywhere close to the 52-week low. So what should one look out for when it comes to ITC? Well, the overhang is largely from a tax perspective. In case of a tax tweak, that could impact cigarette volumes, that could impact profitability for the company as well, and therefore impact your PE and EPS estimates. But outside of that, largely, there doesn't seem to be a problem on the fundamental side, because your FMCG business is extremely robust, at least at the moment. They're gaining market share across segments within FMCG. Cigarette business, I won't speak about. It's a powerhouse in itself. But volume pickup in the cigarette business is awaited. So that's one thing that one should look out for. So on the fundamental side of things look pretty decent. 3-4% dividend yield, not a bad take home on an annual basis either. So across the board, it looks like a decent kind of a buy.
So most analysts believe that is the case. 37 analysts polled by Bloomberg, 92% have a buy, and 5% have a hold, and 3% have a sell. The average target price for 12 months is standing at 503, which is very close to the 52-week high that we saw not too long back.
Yeah, so not much to say, but for the fact that most brokerages this morning are saying that the supply overhang goes, so maybe.
Correct. So maybe a positive reaction. Maybe we've already seen a lot of the negative. Possibly, we'll have to wait and watch for open, of course.
So let's see what...
Alex, last 12 months, 5% returns has been very flat.
Yeah, it has been. So once again, shall we go back to ITC memes? Not yet, maybe. I guess we'll have to wait for some time for that to pan out. But let us know what you think about this conversation.